Hello traders, Gary Wagner here. It is 11:39 in Honolulu and 5:39 in New York on the Thursday, 17th day of March 2022, and this is the daily report for gold and silver. Gold futures continue to spike to higher pricing, with the most active April contract of gold futures gaining about $34, 1.77%, and currently fixed at $1,943. That is a dramatic rise from yesterday's low of $1,895. If you recall from yesterday's show, we pointed out the fact that the low occurred almost precisely at the 61.8% Fibonacci retracement level of the last leg of this rally. However, as a technical trader, we need confirmation that a bottom is formed, and that occurs when we get what is simply known as a V formation from the market trading lower, the low, and then subsequent continuation or follow through. The recent bullish market sentiment in gold is a reflection of concerns about inflation, as well as the conflict in Ukraine, with dollar weakness contributing to the overall gain. Today, the dollar lost 0.6%, with the dollar index currently fixed at 98.045. Today's sharp price increase has definitely formed a key pivot point or key reversal, with this V bottom now in place. While we could identify the low yesterday as a potential bottom because it so accurately matched the 61.8% Fibonacci retracement, we really needed to see continuation as we saw today to get a strong indication that the lows yesterday are the lows that we will see over this leg of the rally. So the question becomes, where could we find resistance and a pullback to enter a long trade at a favorable price? My current thinking is that the best place to look at is just above $1,960, because we had a triple top occur in 2020 and 21. To see that, we're really going to have to move the chart back, which is what I just did. And you can see that we had resistance come in October, November of 2020, as well as the beginning of 2021. So on a technical basis, we really have a strong indication that there could be resistance in this area. That's number one. It is the confluence of other signals that come in at the same price point that really give me a clear indication that this is an important level to watch. And I'm addressing the 38.2% retracement that occurs at $1,962, which is why I currently believe that on a technical basis, we will see a continuation of the uptrend in gold, but in terms of this leg of the rally, I believe that it only has another $10 to $14 to go before it begins to hit resistance. That being said, I still maintain and strongly believe that this rally will conclude at a new price high later on this year. We currently have hundreds of subscribers, many who are well versed in Elliott wave theory, and some that need clarity and a clear understanding of the theory behind it, because I use Elliott wave so frequently. To that end, following the credits of today's show, we will begin a tutorial that was done a couple of years ago on Elliott wave theory. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye. The core belief of R.N. Elliott's wave theory is that markets move in a defined and repeatable pattern, with key elements guiding periods of price growth, followed by periods of price decline. In its most simplistic form, this theory believes that there will be a basic 5-wave impulse sequence, followed by a 3-wave corrective sequence during a complete market cycle. His theory explains that the 5-wave impulse sequence will be composed of 2 types of waves: impulse or motive waves and corrective waves. The belief is that during a bullish cycle, the market will experience price advance in which waves 1, 3, and 5 are growth or impulse waves moving prices higher, and that will be divided by waves 2 and 4, the corrective waves, resulting in price declines. Following the completion of the impulse cycle, the market will begin a corrective cycle, which will be composed of 3 waves, typically labeled A, B, and C. The combination of the 5 impulse sequence and the 3-wave corrective sequence completes one full Elliott wave cycle. This cycle will repeat itself for as long as the trend it is reflecting remains intact. Another interesting aspect of Elliott wave and Elliott wave theory is the fractal nature of the waves themselves. That is to say that each impulse wave can be subdivided into 5 smaller impulse waves, 1, 2, 3, 4, and 5, and each corrective wave can be subdivided into 3 smaller corrective waves, A, B, and C. Although there are many variations as to how the wave sequence will emerge, there are 3 immutable rules or laws that cannot be broken for a wave count to be correct. Rule number 1 is that wave 2 cannot retrace more than 100% of wave 1. Rule 2 is that wave 3 can never be the shortest of the 3 impulse waves. And rule 3 is that wave 4 can never overlap wave 1.